If you are sitting there, looking at the news, watching the markets bounce around like a baseline elevator, and you are thinking, I need something real. I need physical gold in my retirement portfolio to protect what I have spent a lifetime building, you are not alone. Fear is a powerful driver when you are near or in retirement. You are terrified of inflation eating away at your purchasing power. You are worried about a stock market crash wiping out your nest egg right when you need it most. And you keep seeing these advertisements telling you to move your money into a Gold IRA. But you are asking yourself the absolute right question: how much money do I actually need to start one? What is the real cost of entry? I am going to give it to you straight, with no sugarcoating, because this is your hard-earned retirement money we are talking about, and you cannot afford to make a mistake at this stage of your life. If you call up these Gold IRA companies, you are going to find out very quickly that the barrier to entry isn't determined by the IRS. The Internal Revenue Service does not care if you start an IRA with $100 or $100,000. The limit the IRS cares about is how much you can put in per year. If you are 50 or older, the maximum annual contribution you can make into an IRA is $8,600. But here is the catch, and this is where so many people get tripped up. Most people do not fund a Gold IRA with new annual contributions. They do it by rolling over money from an existing 401k, a 403b, or a traditional IRA. And when you look at the industry, the private Gold IRA companies, the ones that handle the paperwork, buy the physical gold, and coordinate with the storage vaults, they set their own minimum investment thresholds. Some companies will let you through the door with a $5,000 or $10,000 minimum rollover. But the top-tier, heavy-hitter companies? They routinely require a minimum of $25,000, $50,000, or even more just to open an account. Now, why do they do that? Is it just greed? No, it actually comes down to the math of how these accounts are structured, and you need to understand this math before you sign a single piece of paper. A Gold IRA is not like a standard brokerage account at Vanguard or Fidelity. When you buy mutual funds or stocks, your maintenance fees are usually fractions of a percent, or even zero. But physical gold is a tangible, heavy, precious asset. It cannot sit on a digital spreadsheet. It has to be shipped via secure transport to an IRS-approved depository vault. It has to be insured. It has to be audited. Because of that, Gold IRAs carry fixed annual fees. You are looking at a one-time setup fee of about $50 to $200. Then you have an annual custodial administrative fee that usually runs between $75 and $300. On top of that, you have to pay the depository vault to store and protect your bars or coins. That storage fee is another $100 to $300 a year, depending on whether your gold is mixed in with other investors' metals or segregated in its own private box. Add it all up, and you are paying roughly $200 to $600 every single year just to maintain that account, regardless of whether the price of gold goes up, down, or sideways. Let's look at the numbers. If a company lets you open a Gold IRA with just $10,000 and your fixed annual fees are $300, that fee represents 3% of your entire gold investment every single year. Think about that. Your investment has to grow by 3% annually just to break even against the fees. That is a terrible financial deal, especially when you are retired and trying to preserve capital. However, if you roll over $50,000 into that same account, that $300 fixed fee is now only 0.6% of your balance. That is a manageable expense ratio. That is why the reputable companies have high minimums. They know that smaller accounts get absolutely eaten alive by the fixed costs of physical asset management. So, if you are asking me how much money you need, here is my rule of thumb. You should not even consider a physical Gold IRA unless you have at least $50,000 ready to allocate to it. But wait, there is a second layer to this rule, and it is the most critical part of the equation. You must never, ever put your entire retirement nest egg into gold. Gold is a hedge, it is an insurance policy. It does not pay dividends. It does not pay interest. It just sits there looking pretty in a vault. Most conservative financial experts recommend putting no more than 5% to 10% of your total retirement portfolio into precious metals. Let us do the math again. If you need a $50,000 minimum to make the Gold IRA fees mathematically sensible, and that $50,000 should only represent 10% of your overall retirement portfolio, that means you should have a total nest egg of at least $500,000 before a physical Gold IRA makes sense for your life. If you have a $100,000 total retirement portfolio, and you put $50,000 into gold, you are now 50% allocated to a single, volatile commodity. That is not safety. That is gambling with your retirement security, and I will not stand by and let you do that. If you do not meet those numbers, but you still have that burning fear and want the protection of gold, what do? You do not panic. You look at the alternatives. You can stay right where you are with your standard, low-fee traditional or Roth IRA and buy a gold ETF, an exchange-traded fund. These funds track the price of gold, they give you the exact same exposure to the price movements, but they have zero setup fees, zero storage fees, and you can buy into them for the price of a single share. Your actionable takeaway today is to pause, step back from the sales pitches, and audit your numbers. Look at your total retirement portfolio. Determine what 5% to 10% of that number is. If that amount is under $50,000, protect yourself by utilizing low-cost gold ETFs within your current, standard retirement account. If your allocation is over $50,000, and you truly want the peace of mind of owning physical bullion, then, and only then, do you shop around for a self-directed Gold IRA custodian with a flat, transparent fee structure. Be smart with your money, protect what you have earned, and do not let fear drive you into an investment that benefits the gold dealer more than it benefits your retirement.